Hello.
Good morning to all of you. I welcome you to Union Bank's financial results announcement for the first quarter of FY25. Thank you for joining us today. I trust you have reviewed our results already. Let me provide an overview of our uh, performance and key highlights of this quarter. Overall scenario, the first quarter is typically a slack season for the banking sector, compounded by the election impacts and annual staff transfers, resulting in, I can say, a little bit of muted business growth. As far as the banking industry is concerned, the credit growth has been outpacing the deposit growth, increasing competition for liabilities. All of us are quite aware of that. We are mindful of this fact and implemented several strategies to address this challenge, which I will discuss in detail over the next few minutes. Let me just talk to you about the guidance versus the actual performance of the bank. Despite the challenging first quarter performance, so I will just give you my guidance, what we have given in the beginning of the year. Deposits grew by 8.5% YoY, advances by 11.5%, largely in alignment with our guidance range of 9 to 11% for deposits and 11 to 13% for advances. Our NIM stood at 3.05, surpassing our guidance of 2.8 to 3% what we had given for FY25. On asset quality, we are showing consistent improvement in the past several quarters. In line with our guidance, gross NPA is reduced to 4.54%, with gross recovery at 3,368 crore and slippages restricted to 2,318 crores. With regard to the growth strategy of the bank, we are aiming for a sustainable growth, balancing top line and bottom line performance. As per latest RBI data, as at June 24, SCBs reported 10.6% YoY deposit growth and 13.9% growth in the credit. Vis-a-vis our banks reported 8.5% and 11.5% growth respectively. Both on YoY basis and QoQ basis, the deposits and advances of the bank are positive. We are not growing top line at the cost of bottom line. Let me repeat this once again. We are not growing the top line at the cost of the bottom line. CASA and retail term deposit form 72% of our total deposits. We are maintaining this ratio consistently for quite some time now. Under advances, our strategy is to keep retail and corporate book, as we have been telling continuously, in the range of 55-45 ratio. As of June 24, the ratio is maintained at 56%, that's our retail book, and 44 is our corporate book. Let me just come to the Q1 highlights now. The total business of the bank reached 21.36 trillion with deposits of 12.24 trillion and advances at 9.12 trillion, while our savings bank deposits registered a YoY growth of 4.6%, CASA on the whole grew by 3.7%, and term deposits registered overall growth of 9.5%. We grew better under RAM advances by 14.5%, while large corporate advances grew by 7.8%. Higher growth has been seen under gold, which is about 41%, education loan at 45%, and vehicle loan at 24.5%. Net profit of the bank reached 3,679 crore in June quarter, a growth of 13.7% YoY and 11.1% on the QoQ basis. Operating profit of the bank increased by is up at 7,785 crore with an 8.4% YoY growth and a 19.1% QoQ basis. GNPA reduced by 280 bips to 4.54%. Net NPA has been brought down to 90 bips actually, and it is down by 68 bips, and the PCR of the bank has improved by 263 bips to 93.5%. Credit cost, though it has improved to 0.73%, grew by 24% YOY basis, but on a QOQ basis, it has, increased a little. Our CAR is quite strong at 17.02%, and CET1 ratio at 13.81 is at June 24, it's at 13.81. ROA improved to 1.06%. ROE is at 15.7. The implementation of new investment norms has actually positively impacted our portfolio. As a result, our general reserves have increased by 1,722 crores, following the guidelines which has been effective from April 1, 2024. Additionally, the risk weight assets of the bank has experienced a net positive impact, leading to at least improvement of 20 bips to our CAR. Now, with regard to the major things about CASA growth, yes, we have implemented many strategies. We understand the pressure on CASA and the liability in the market right now. So the bank has taken many strategies, like, we have taken a consultant on board to improve our CASA penetration in the market. We have taken up CASA transformation, aiming at bringing or increasing the relationship with the ETB and driving, the branches to bring in a lot of NTB. So we have put in a lot of dedicated manpower under the CASA framework to look at increasing the CASA of the bank. The bank has also targeted, similarly, the RUSU centers. We have opened 12 premium branches, which will be strengthened through the BC model. We have also made a single point dedicated hub for current account opening. We have also established the customer service excellence cell during the quarter to improve the customer interaction and, of course, to resolve the complaint management in the bank. We are also offering competitive retail deposit rates. So all these things we are sure that will yield result, and we will have a better liability structure in the bank for the current, this quarter and going forward also. And let me just tell you the major achievements that the bank has had during the quarter. S&P Global Ratings revised our outlook to positive, which aligns with the sovereign rating of the country. India Rating upgraded our rating to AAA positive, one notch up, of course. We have opened, as I told you, the first ever branch in Lakshadweep at Agatti, and 12 premium branch in the RUSU centers. We have also having a capital raising plan of 10,000 crores for FY25, which has been approved by the board, of which 6,000 crores will be equity and 4,000 crores will be in the form of 81 and Tier 2 instruments. Let me just conclude by saying that, again, I would want to emphasize that our balance sheet is quite strong, stable, and sustainable. Key initiatives we have taken in many areas like centralization, verticalization, HR transformation, and a robust assurance framework, all yielding positive result for the bank. We have strengthened our digital capabilities. We will talk to you in the later if and when the questions arise in this regard. The bank is building on these initiatives, and we ensure that we will be improving our performance and to enhance the customer experience. Before I conclude, let me just talk about yesterday's outage of Microsoft. I would like to tell you and emphasize here that the bank has not been impacted by the outage at all. Let's conclude here, and now we are open for questions. Thank you.
Good afternoon, ma'am.
Good afternoon.
Congratulations for the quarter.
Thank you.
I would want to start with the fact you mentioned about the top line, not at the cost of bottom line. Now, I want to understand the strategy more because if you talk in terms of growth, even the numbers which you presented of Reserve Bank of India, it is slightly less than that. Is it the result of this strategy only that you want to protect your margins and only do not grow at the cost of the top line?
I can tell you that though I've said that, we will not grow I will not be aggressive on my top line. And you have seen that my growth is very sustained over the last few quarters. And whatever guidance that we have also given is, as per the market, and it is, to some extent a little lower than what the market is going through. So I will not cut my, margins and grow my top line. That's very clear on this. The way we have sustained, though I had given The NIM of, 2.8, I've still maintained it about 3%. This is all because of the strategies we have taken. And to tell you the fact, we have run down almost like 15,000 crores of my advances portfolio because I wanted to save my margins on this. And secondly, if you look at my ROA also, though I promised an ROA at FY25 of 1%, we have been consistently doing this from June 23 onwards, and my ROA is 1 or above 1 all through, except for March, of course, where we dipped by a little. We were at 97 bips, and that all of us know because of one small impact that we had with regard to the pension obligations. Otherwise, I have maintained my margins, my ROA, and my ROE, and that is because of the strategic decision that the bank is taking not to go in for high cost deposits and low yielding advances.
And also, if you talk about the margins front, you have kept a cushion while giving the guidance. Now the performance is better than the guidance which you have given. Are you anticipating that a further decline is possible in margins? Because if you take the average of last 2 to 3 quarters, it has been on the declining front.
Yeah, we have seen the margin decline from 3.13 to 3.05, and even on the QOQ basis and also on the YOY basis. So I can just tell you that there are challenges in maintaining a NIM of 3%. We have the cost of deposits have risen by almost like 40 bips if you compare YOY growth, whereas the yield on advances have increased only by 29 bips. So that's one challenge that we have faced. And a slight reduction in the cost of deposits in this quarter we have seen. But however, we have also seen that the YOY also has declined by 15 bips. Now we are also looking at a similar kind of whatever we are talking about rate cut during the current fiscal. So all this will have an impact on my margins, I hope. But deposits rates in future, we do not know, looking at the tight liquidity position and the widening gap between the deposits and the credit growth, it may affect our margins. So anyway, we are all keeping our fingers crossed, and we hope that the margins have maintained, to 3% at least.
When we spoke last time, you mentioned about home loan growth, which is lagging if you compare the other peers in the industry. What is the performance now? Is there an improvement, and is there still a scope of improvement?
Yeah, home loan has picked up because of the various strategies that the bank has taken up. It's on a YOY basis. The home loan has increased by 12.3%, and QOQ, of course, was by about 2.7%. Now, home loan forms almost like 48% of my total retail loan portfolio. So there is a good impact on the home loan growth. We have taken up a lot of strategies. We have a lot of campaigns that we have done. My RLPs have been strengthened, that the retail lending points have been strengthened. Our underwriting processes has really been strengthened. My TAT has also improved, and all this has yielded good results, and that's how my home loan has increased in this quarter.
Good morning, ma'am.
Good
Congratulations to you and team for the stupendous performance. I would like to see 2 questions for that. One is that you can see MSME sector is a single-digit growth. While we talk about the MSME is the driving force the whole global as well as nationally. So can you throw some light on that? Second thing, I would like to know the deposits. When you talk about deposits, now the stock market is at the peak, and most money is being diverted, even common man is putting there. So how do you address or lure the customer to deposit with your bank so that your operating will be much easier?
MSME, we understand there has been a muted growth in this quarter. It is about 7.2% growth, whereas if you compare the other banks, specifically the public sector banks, they are all in the same range. So I cannot say that I have not done well in MSME. We understand there are issues, typically because of the various issues that I pointed out in my opening remarks of transfers and the elections and all those issues. That's the reason there has been a muted growth in my MSME, but we are taking a lot of steps to see that it is the growth is, the double digit, and it is in keeping with the market trends. That is with regard to MSME. With regard to my, CASA, that's the second question that you asked about. CASA, we have done many activities actually over the last 1 to 2 quarters. Starting from January, we have taken a lot of steps. As I initially told you, that we have taken a consultant on board to help us in driving the CASA growth. For example, we are looking at something called the Union Leap project, which is a transformative project for improving the CASA ratio of the bank, where we established relationships with our existing ETB customers also, and also new customers. We also have told you that we have opened premium branches in RUSU centers, which we are sure is the branches which will drive the growth in the CASA. Now, if you look at I just want to give you one example of a branch in one part of UP, which contributes to almost like 55 to 60% of the CASA. And we have seen that they were losing CASA deposits, so we are strengthening, the premium branches so that those branches can bring in better results. We are also looking at, car business centers. We have looking at about 48 to 50 car business centers where we will be posting, and we have posted almost AGM ranked officers in those locations to bring in car deposits. We have also looking at the digital engagement. We have last quarter we have opened almost like 48 lakh accounts, and this quarter we have opened about 9 lakh accounts. During the last year we opened about 48 lakh accounts, and this quarter we have opened about 9 lakh accounts in CASA also. So various products now, that if you look at retail also brings in a lot of deposits. So retail growth is also a factor by which we will be able to bring in a lot of deposits. We've also started the customer service excellence cell, which is dedicated to ensuring good service to our customers. And I'm all of us are aware that it's only service that can help us in getting a good CASA base. Thank you.
What has been your fundraising plan, if at all? Do you believe that this year you will require that?
If you have seen my car, it's quite comfortable. For growth strategies, of course, I would be wanting to bring in, capital plans. We have already taken, as I told you, approval from the board for 10,000 crores in the form of equity and Taiwan. So as and when we require it, and depending on the liquidity position and the growth strategy of the bank, at the opportune time, we would like to raise capital.
Can you also throw light on increased provisions, both QOQ and YOY? It's around 28% more than the last quarter. What has been the reason?
See, if you're looking at it, basing on the general slippages, whatever is happening, the normal times, we are doing it in the NPA. And also, we also increased our provision for some the 2 or 3 couple of accounts, which there is already some restructuring discussions are going on. So we are, as a prudent measure, we are started providing for those accounts also. So, but still, our provision coverage ratio is still, we are maintaining at around 93%. If you are looking at the overall, that is going on a regular basis. There is a little higher we are provided for the standard assets for this.
You had also migrated to Vyom 1 year or 1.5 years back. Now, what has been the performance there? Are you seeing more tractions? Can you give an update on that?
Yeah, so Vyom is our app for the customers, and we have seen a good number of customers joining on the Vyom app. And as a philosophy, whichever new customers we are onboarding in the bank, we try to onboard them on the Vyom app, because Vyom today offers all the facilities, not only the payment side, but also the savings, investment, and the other lifestyle facilities already available in the Vyom. We're also integrating more and more loan journey through the Vyom app, because you are also aware, we have spoken earlier also about the digital banking platform that bank is building. And more and more journeys are getting integrated to the Vyom app. So through the Viome app, we are seeing a good traction in terms of the number of transactions and the number of customers that are logging into the app on a daily basis. And we have also observed that those customers which are using our mobile app, generally the average balance in those accounts are higher than the customers which are not using the digital banking. And therefore, the endeavor is to onboard more and more customers on the Viome app, and at the same time adding more and more services for the customers on the app.
What is the on-ground situation of corporate credit? Is it stagnant, picking up? Can you give update?
Ram will do.
Literally speaking, again, I have to say that the public capex, that is from the PSUs, that is still going on. Government backed industries, PLI industries, we are getting a little more. But yeah, we have very broad-based private capex. We are not yet seeing that in the market, though it is already due. We hope to see that in a short time.
In terms of number, how much has been availed and what is the pipeline?
We have a disbursement pipeline of close to about 54,000 crores in our hand. We are focusing on a lot of sunrise sectors actually, looking at renewable energy, the EVs, semiconductors, data centers, and all those things. And as ED has already said, the private capex is yet to pick up. We are still relying on, public PSUs. That is what is happening. So we hope to see some good revival after the budget, of course, and in the second quarter or the third quarter, probably we will hope to see some good results on the capex increase.
Now that you have mentioned budget, I mean, what are your expectations? Just 2 days away.
We have no expectations. I cannot talk about that. Let's hope for the budget to be announced, and then we will have word on that.
I would like to know one thing, that you have
Yes.
sponsored many upcoming or sunrise industries, which you said. Is there any unicorn you could create with your innovations in your bouquet?
Not yet, not yet. We have onboarded a lot of fintechs on our board, actually, for for our digital platforms. We have used them, but we have not created a unicorn as of now. We hope to do that in the near future. Thank you.
Yeah. Hi, madam, can you hear me?
Yeah.
Yeah. So, Sachin, this side from Financial Express. I wanted to get some insight and guidance on your NIMS, which has been, it has been falling consistent, last year, since it has been coming down, and now, last year you said that you would like to have it, above 3%, but now I think it's 3.05. So, do you see that it can go below 3 now? What will be your strategy going forward now?
So what, if you remember, the last time when we spoke to you, we gave a guidance of NIM at 2.8 to 3%. That's a NIM that we had given. Of course, there are various reasons why our NIM has been continuous. We can say that it has been falling. It was at 3.13, so it has come down to 3.05. Lot many reasons. Of course, you saw the MCLR, impact was there, so which we were able to take up in the last few quarters. So the MCLR now is almost flat, of course. Whatever the 250 bips that the RBI repo rate was increased, we were able to pass on to close to 165 bips. And last year we passed on about 25 bips in the form of MCLR to our customers. Yield on advances, if you have seen, it has dipped actually during the current year, but the cost of deposits have risen. So these are the reasons why there has been an impact of NIM. And if you, in the current quarter, if you look at this, the cost of deposits have slightly reduced to the extent of 5 bips because of the fall in the market interest rates, and of course, the yield on advances has declined by 15 bips, primarily on two reasons. Of course, we were that passing on of MCLR was not happening, and secondly, of course, the dummy ledger recovery that usually we have in a big number in each of the quarters, we were not able to see that kind of dummy ledger impact because of the recovery coming down. 11 bips impact was there, and that's the reason the NIM has also fallen. But we stand by our guidance of 2.8 to 3%, and we will keep our NIM, at 3% at least.
Good afternoon, ma'am. Manoj Shetty from Udayavani. Ma'am, how much growth do you expect from the digital platform?
Yeah, so we are in the process of creating the digital banking platform as of now. But when we talk about the digital, it includes the liability, asset, and the other wealth management products. So as of now, if I give you some insights on what the journeys on the liability and asset side are doing. So far on the asset side, we have been able to lend close to 10,000 crores of loans through the digital only channel. And on the liability side, particularly the retail term deposits, recurring deposits, we have been able to mobilize close to around 65,000 crores of funds through the only digital channel. And these are in terms of the quantum, but if I look at the number of customers or number of transactions that has happened on the only the asset and liability side, that is very huge. And the third aspect of the digital is also in terms of the cost savings. So for example, today, almost 99% of the MSME loans below 10 lakh are getting renewed through the digital channels. Almost close to 85% of the retail loans are renewed through the digital channels, which means that it saves a lot of person hours time in the bank. And similarly, we are also implementing this renewal, digital renewal for the agriculture. That will again be a kind of cost saver. So while on the asset and liability side, we are able to generate business and the revenue, we are also able to save cost by introducing certain processes using the digital. But this is the current phase. In the second phase of the digital banking platform that we will be implementing, our idea is to bring a large part of the retail, agri and MSME loans on the digital channel, which can be accessed by the customers on a do-it-yourself basis at the comfort of their home or office, or it can also be through the assisted channels in the branches or our officers or the agents reaching out to the customers and generating that business. We are also aware that as we are building the digital channels, the fruitful result will come only when we are able to get more and more leads, and therefore we have set up and built up the customer relationship module, which is already operational, which is able to capture leads not only through the branches and our sales agents, but also through the social media channels, websites, call center. So all these things are going to contribute a lot of business through the digital channels. As a broader objective, and we have shared this earlier, that over the next couple of years, 50% of the RAM segment loans we expect to be originated through the digital channels, and a significant number of CASA accounts should get generated through the digital channels.
Thank you, sir. Madam, why is the bank unable to check the arrest in this fall in CASA ratio, year on year, then quarter on quarter we have seen a decline, and what are your plans and your also, how do you see this ratio going forward?
Sorry. If you look at the CASA percentage of the bank, of course, in our bank at least, it's been in the range of almost like 34 to 35%. That's how the CASA ratio of the bank is. And historically, that's a kind of a number that we have been having. But if you look at the industry as such, in a high interest rate scenario, the CASA ratio tend to decline. And our CASA ratio has declined by 120 bips to 33.4%. The decline is quite less as compared to my peers if I look at this. However, in absolute terms, the CASA has increased to close to about 15,000 crores. We have added, as I told you in the very beginning, that we have added more than 46 lakh new clients last year, and in this quarter, about 9 lakh customers we have added. We have a good franchise of branches, 8,500 branches. We are also opening new branches. We are also looking at, premium branches where we can cater to good set of customers. We have the BC model also, which is also bringing in new customers. So we will be able to maintain our CASA ratios to 34 to 35%. That's where we are always looking at. But if you look at, on absolute terms, we are growing the numbers. It could have declined. It is declining if you look at the ratio as such because of the term deposits also increasing. In the high interest rate scenario, people tend to go towards, retail term deposits rather than keeping the money in the, CASA form.
do you see any further upside in your term deposit rates going forward, you know?
Term deposits increasing?
Yeah.
So what we have seen is, in this quarter, of course, we have seen an increase of, I'm talking about retail term deposits. We have grown to about 3,000 crores. That's in absolute numbers. We have seen the growth in the retail term deposits. We have not taken much of bulk deposits, and our ratio to bulk deposits to retail term deposits continues to be at 72 to 28%. 28% being bulk deposits, and RTD and CASA is about 72%.
He's asking if there is a scope of
Further increasing. Increasing. Yeah, it depends on the, we have, I think if you look at my peers, we have got the highest interest rates in the retail term deposits, and we'll have to, see that how we can increase that portfolio much better through my franchise of my branches, of
Because
course.
we see that some of your, big lenders have already done it. So I was just wondering, maybe you will also be,
No,
because
we have compared our rates to our, the market, and we are still much higher than the others in the, among my peers.
Oh, thanks.
Thank you.
Ma'am, your interest rate expense has also risen significantly, around 15%. And also I want to get the guidance on cost to income ratio, where we stand and what is the scope in this fiscal year.
So cost to income ratio, of course, we saw a spike in the March, about 53%, and it has now declined to 44. And you've seen over the period, if you look at from June 23 onwards, it's just at that rate only, 43.66 and 43.68, 43.77, and now we are at 44. It's a slight increase of 10% of the, 10% is the increase that we have seen, and that is because of the staff expenses that we are having. So cost to income ratio would be, or the similar ratio, and I think we are the best in the industry with, if you compare to my peers with the cost to income ratio.
Good afternoon, ma'am.
Good afternoon.
Rajesh from Madhubhumi. How much the preparedness of the bank to windows like technical disruption in future?
Yeah, so Union Bank is a very tech savvy and digital savvy bank, you are aware. And that is for creating more and more convenience to the customer. But at the same time, as we invest more in technology, we have to be mindful of the security aspects also. And therefore, security also we have invested a lot. So if I look at the security, we have a 24/7 SOC, Security Operations Center, at the IT division, and we also have the Cyber Security Center of Excellence. And we have a continuous monitoring of all the security at the network layer, application layer. At the same time, they are supplemented by the reconciliation department, transaction monitoring department, which do the real-time monitoring of the transaction. So we ensure that all our endpoints are properly protected. At the same time, we have also taken services of best of the marquee players in the world in terms of the security, through which we have a continuous oversight on any traffic that is coming to our system, whether they are malicious, whether they are normal or not, any increase in traffic from any particular destination. So there is a complete oversight, and we can assure that Union Bank systems are very robust and secure.
Madam, maybe you must have given this guidance of credit deposit growth before, but can you please, what is your, and also, banks are struggling in terms of, mobilizing deposits. So what's your view on that?
So for advances growth, we have given a guidance of 11 to 13%, and we are at 11.46 in this quarter. We had given a deposits growth of 9 to 11%. We fell short a little, and we are at 8.52%. Now, with regard to deposit growth, we have taken a lot of initiatives. I had remarked in the very beginning that deposit mobilization is one of the key, you can say, key factors on which we are today, looking at. That is one of the mantra. NPA recovery is one mantra, and CASA, increasing CASA and retail term deposit is another mantra for the bank. So these two mantras are there, very clear for the bank. And so we have, if you look at, but however, the liquidity position of the bank is quite comfortable. And we have excess SLR to the tune of almost 65,000 crores. So whatever growth I will be able to do, there's no issue on that. Our stable deposit, that's CASA and retail term deposits, is almost 72%, as I told you. And the LCR of the bank is at 138%, and the net stable fund is about 130%. So looking at all these things, I'm quite comfortable with my liquidity position right now. If I have a growth structure which comes up later with the increased capex on the private investments and other things, I should be able to look into those things, and with a good franchise of branches and 76,000 staff that I have, I should be able to tide over that problem.
Madam, RBI governor yesterday, he expressed concerns that there is a gap between credit and deposit growth in the industry is widening. So as I can see, can we expect this gap to narrow in your case, or will it remain as it is, or will it widen?
So last year, if you looked at, my gap was almost like 4.8%. I'm talking about FY 23-24, but in the last year, it came down to the gap almost decreased to 2.4%. Now, this quarter, I've also almost like 15,000 crores of my advances I have run down. And I do not want to keep this kind of a growth with low yielding advances. We are not looking at this. I'm going to reduce this gap further. But as in the very beginning, I told you, I am not going to grow my top line at the cost of my bottom line. So that is one thing is very sure on this. So we will see, reduced gap between the advances growth and the deposit growth too.
Thanks, ma'am.
Thank you, sir.
Hi, ma'am. Hello.
Yeah.
Ma'am, what is your plan in urban and rural areas in terms of digital banking? And I want to ask you, ki yesterday some problems are going in software, Microsoft Outreach. तो उस पर आपका क्या कहना है? कुछ इफ एंड बट हुआ था कल सिक्योरिटीज़ वगैरह को लेके, और फर्स्ट क्वेश्चन मेरा यही है कि रूरल एरियाज में डिजिटल बैंकिंग को लेके
मैम हमारा स्ट्रैटेजी है कि इफ यू लुक एट माय बैंक एटलीस्ट almost 50% of my branches are in the rural centers. Now, I give the same kind of a, digital penetration as it is in my metro and the rural. We don't differentiate between this. And of course, in my RUSU market, the RUSU market, meaning rural and semi-urban areas, the BC model is very much prevalent. And if you look at the BC model, it's totally a digital model. Now, whatever penetration that we are having in the urban and metro centers, the same kind of digital penetration I am able to give at the RUSU centers also. And secondly, with regard to the outages that you are talking about, we were absolutely not affected by any of the Microsoft outages which happened yesterday. Thank you. Thank you very much. Thank you, all of you, for coming. Thank you.